All right, let's talk about Palantir. This is a company that's right in the middle of this whole AI explosion. And its stock, it has just gone on an absolutely incredible run, which is everyone asking, is the journey just getting started? So, after a stock shoots up nearly 2,000%, you have to ask, right? Is now really a good time to jump in? Is this a genuinely smart buy? Or is it possible the hype has gotten a little ahead of itself? Let's dig into both sides of the argument. First up, let's look at the bull case. There are some really powerful reasons why investors are so excited about Palantir, and it all starts with its absolutely staggering growth. Okay, let's just let this number sink in for a second. 1,900% in just 3 years. That is just phenomenal. To put that in perspective, if you had put just $100 in back then, you'd be looking at almost $2,000 today. Now that is the kind of growth that makes everyone sit up and pay attention. And it's not just the stock price that's soaring. Their U.S. commercial revenue, that's money from private companies, shot up 93% in the last quarter alone. This is huge because it shows Palantir is breaking out from its government-only roots and really making waves in the private sector. So where's that revenue coming from? Well, look at the customer growth. Just 4 years ago, Palantir had only a handful of commercial clients. Today, they have 485. That is some seriously strong demand. So what's the engine behind all this? A big piece of the puzzle is their artificial intelligence platform, or AIP. It basically makes it super easy for companies to use cutting-edge AI on their own data. You combine that with the fact that they're now profitable and demand is booming, well, you've got a recipe for explosive growth. And if you listen to their CEO, Alex Karp, he thinks they're just getting warmed up. He's on the record saying this is just the beginning of something much, much bigger. That suggests, for all this incredible growth, Palantir's best days could still be ahead. But, that's only half the story. Every great growth story comes with risks, and for Palantir, they're pretty significant. So now it's time to look at the other side, the bear case. And this really gets to the heart of the matter for a lot of Wall Street analysts. The business might be great, sure, but is the stock price itself just too high? So how do we even measure how expensive a stock is? Well, a common way is the price-to-earnings ratio, the PE ratio. And just for context, your average company in the S&P 500 trades at about 25 times its earnings. Palantir, it's trading at over 500 times its earnings. That's not just high, it's an astronomical figure. And because of that wild price tag, most of the pros on Wall Street are pretty cautious. A huge majority, 68%, rate the stock as a hold, not a buy. They're essentially saying, hey, the current price probably isn't a great entry point. This quote from well-known short seller Andrew Left really sums up the skepticism. When the valuation gets so extreme that experts are literally calling the numbers absurd, that's a major red flag for any investor worried about a potential price drop. So you can really see the two sides of the coin here, can't you? On one hand, you have the bulls, the optimists, who say Palantir is a clear leader in the AI revolution with absolutely explosive growth. But on the other hand, you've got the bears, the skeptics, who look at that sky-high valuation and say, look, all that future success might already be baked into the price, and that creates some serious risk. And that really leaves us with the big question, doesn't it? Is Palantir one of those long-term winners where the risk is absolutely worth it? Or is this a bubble just waiting to pop? Do you bet on the tech and believe they'll eventually grow into this massive valuation? Or do you just see a stock that's gone way too far, way too fast? Honestly, how this plays out could be one of the defining stories of this whole AI era.